Okay. So let's make a start. Hello everyone, and welcome to our webinar on how you can successfully scale your business in partnership with the Great British Entrepreneurs Awards, recently sponsored by Alaka Bank. My name is Holly Gallagher and I'm a partner here at BDB Pitmans. I work mostly in the entrepreneur space and support with legal services in this sector. Our firm is a leading multi-practice law firm and we offer a full legal service in a really approachable way. So before we start our webinar, I've just got some housekeeping rules I have to relay to you. If you have any questions during our session, then please pop them in the Q&A function below and we will get to them at the end of the webinar. If you have any IT issues or queries, please use the chat box and my colleague Megan will try to support during the webinar. And we will also be circulating the recording and the FAQs after the webinar with our panelist details if you have any further questions or you want to reach out and make contact with them. So right, let's get cracking. We have a great session in store for you today. And firstly, let me introduce our panelists. I'm joined by Dominic Portman, our 2023 winner of the Great British Entrepreneur Awards in our sponsored Scale Up category. Very exciting. Dominic is the founder and managing director of Boulevard, and we're honoured to have you with us today. Next up, we have Lara Sanderson, head of marketing from Ideas Forum, who works on the Great British Entrepreneurs Awards, among lots of other things. She has a wealth of knowledge about the sector and she has many success stories of entrepreneurs in the market. And lastly, we are very excited to be joined by Nick Travis, partner and head of entrepreneurs at Evelyn Partners, who is talking to us about tax reliefs and some tax issues linked with scaling your business. So thank you all for taking part in our webinar, and thank you to everyone at home and in their offices for joining us today. We hope you find this useful. To start this session, I'm going to hand over to you, Dominic, to share your journey and hear more about how you became the winner of the GBEA 2023.
Lovely. Thanks so much, Holly, and good morning, everyone. I'm really pleased to be here today talking about my story and Boulevard, and hopefully can share some stories that I've gone through in the past and maybe help in terms of how you scale up a business to other relevant businesses. So yeah, I suppose starting from the start, I was a student and I started selling costumes to my friends at university, which was a lot of fun. Quite how we get from there to today to being a tech-enabled online marketplace super seller is obviously a journey with some ups and downs. And I think the first thing that I managed to do through selling these costumes was understand the market and speak to the brands and the distributors of those costumes. And one of the things rang really true throughout is that marketplaces are growing exponentially. The likes of Amazon and eBay are taking over. You'd had the move from the high street to .com websites, and now .com websites are being overtaken by marketplaces. And the suppliers that we had, so the brands and the distributors, really didn't have a route to market on those channels. They didn't have any good, reliable sellers or retailers who they could work with who sold through those domains. And they also had the headache of logistics and warehousing as well to deal with in terms of sending orders out. Very different to a retail operation that they've been used to. So in 2016, I started the company, and initially we were called Fancy Dress Worldwide, just focusing on costumes and party wears. And we sold costumes at scale on these marketplaces online. We partnered with the brands and the distributors, and we built some technology which enabled the supply chain to synchronize to our platform. And we handled all of the logistics, so the warehousing, the fulfillment of orders, and did a few pieces around dynamic ordering and automated processes within the business from that perspective. And we found it was quite a winner with the suppliers, the brands and distributors we started working with. We did around £700,000 sales in the first year, and in the second year we did about 1.7 million, which was, a really good start. And for me, it was a nice proof of concept. And at that time, I think it was something I'd always been passionate about: growing a business, scaling a business, and just going through that journey of, really kind of, I suppose, getting the thrill of winning in business is really what drives me. And I'd always had that. But I found myself in a position where I can remember that one of the best sellers at the time was this sort of gangster's cane, fancy dress cane, as it was. And I found myself in a position where, I was listing the products still, I was still doing customer service, I was packing these canes. And I remember, because I had to pack, 200 of them in one day after we'd had a flurry of orders. So it was a great moment. But at the same time, I was sort of thinking, this is how we can operate this model profitably. It was a new model. No one had ever done this before in terms of building the technology platform and doing the end-to-end of selling and marketing it to brands and distributors in this way. But it really was a moment where we thought, how do we scale this? Or rather, I thought at the time, how do I scale this? And I sort of started with each process, I suppose, in terms of, okay, what can I build the technology for, hire people for first? And the first things I did was hired someone for customer service, and then hired someone for the picking and packing of orders. And from that point, just sort of hired someone in each rung of the business. But we came across a few challenging points, and we moved warehouses a couple of times to scale up and grow bigger. And we'd always had plans to look into other product categories and, understand, is this a problem for brands and distributors in other categories? Because if it is, we can come in as their expert marketplace partner, and we can utilize the technology we've built to integrate with them and start selling their products better. And in effect, these businesses become our supplier, and we don't charge them for the partnership. It's a partnership where we buy products from them. So it's very much kind of traditional retail relationship, but with these benefits. And I think one of the biggest challenges we then came up against was raising a funding round to do the first move to the warehouse. And I had no contacts whatsoever, really. I just started the business out of Worcester. So it was difficult to tap into those networks and get close to business angels who would fund the business through that round. And eventually, after many messages, it was actually a LinkedIn message which was responded to. And that was the first investor who came in that round and introduced me to London Business Angels. And from that point, I'd gone into various angel circles around Minerva Business Angels, etc., and really rapidly started to build the round. And in 2018, we closed that round, and we managed to scale into the new warehouse, which was great, and allowed us that extra sort of capacity, I suppose, to really scale through that category. And we scaled up then to about 3.5 million in sales, and it was going well. Things were looking good. We had the next challenge, I suppose, which was, having been profitable and taken an investment and invested that money, how do we get the model back to profitability? And we had to build out technology in different areas around the warehousing, the logistics, to really enhance those and optimize those processes within the business. And then COVID hit, and of course, being a costumes and party wears retailer during the time of a pandemic is not ideal, because everyone's sat around at home. So not a lot of people really want party wears and costumes. So that was a real moment where we had to scratch our head. Overnight, 80% of our revenue fell off, and we had a decision. I had a decision to make, which was, do we batten down the hatches and try and wait this period out, or do we speed up our diversification into different categories? The software we built, which we knew was good for costumes and party wears, hopefully it would be a fit for these other categories. And so we did that, and it turns out it was a problem in other product categories. It led to us launching suppliers initially in arts and crafts, in sportswear, stationery, and every category we went into, these problems existed, and there was no technology to sell at scale. There was no understanding of the data that you need to have around products in marketplaces, understanding of the compliance rules around each marketplace and how they manage that, and then having a scalable and economical logistics provider who's reliable. And that's one of the things we really focused on, is how do we get the cost down of fulfilling orders by bringing that in-house. And that's been a big drive for us too. So at that point, we were rebranded as Boulevard. It was 2020. And we continue to market ourselves as the super seller on marketplaces. And I think at that time that the model kind of got some momentum, because we'd illustrated it across multiple verticals, and we'd managed to not just have kind of one siloed product category. And all the while we were building more intricacies in around our software, how we were pricing products, how we were integrating seamlessly with suppliers and bringing the time down of integration. And in 2021, it came to the moment after COVID where we'd grown to around about 5 million in sales, but costumes hadn't really come back yet. And it's an interesting thing. It took 2 years after the pandemic for Halloween sales to pick up. You know, the first 2 Halloweens, no one really celebrated, which was sort of an unforeseen, unexpected thing. And, you know, like a lot of things in business, as much as you want to be able to predict what can happen, there are a lot of things that you can't predict. And that was one of them. And the categories that we'd entered initially for COVID, we prioritized those that would be given a lockdown, you know, to really get that revenue there and then. So those had gone up and they'd sort of plateaued a little bit. And we knew that in order to get into the new categories now and really expanding the model, we needed to go and raise another round of funding. So that was our seed round of funding in 2021. And I've been in discussions on and off with Fuel Ventures over the 3 years previous. We'd had some discussion around the model. They understood it. They understood it in terms of costumes and party wears. But I think having diversified, we'd really proven to them that model. And that's why they did the full ticket. So they did the full ticket of our seed round, 2.2 million we raised, which allowed us then to continue the expansion and continue growing into more marketplaces as well. And the next kind of drive for us really is not just on one side, more suppliers and brands who are utilizing our partnership to grow sales and growing our revenue, but also on the other side, growing the number of marketplaces we're listed in and the number of marketplaces bolted in, all into our one central platform. So we've just launched with the likes of B&Q, Superdrug, Debenhams, and many, many more marketplaces. And I think the kind of latest challenges, I suppose, have been around, you know, what's going on in the world. I think it's been such an unpredictable time. And we grew in the last financial year to around 10 million pounds in sales now. So we grew 86% in that year, which is fantastic. But, you know, the investment landscape now is not what it was. And for businesses like us who really have that growth mentality and that mentality to keep scaling a model that we know works, it's now shifting that kind of mid-scaling to a profitable business that is, you know, sort of capable of being in the landscape we're in now. So we've launched recently a third-party logistics service, so just a standalone order fulfillment service, which is taking all of the software and operations that we've built for ourselves to fulfill our own orders and offering that out to other companies. And what we found when we went to market is actually we've built something that very, very powerful. We've done it for our own purposes, but how it stacks up against the market is really great. So we've got a pipeline now of 5 quite large brands who are onboarding to our fulfillment as we speak. So I think one of the key things for me around scaling up has been this kind of diversification and less concentration in certain things like product categories and marketplaces. But also, I suppose, in those moments where the climate changes, we've had to kind of, you know, shift gears quite dramatically, for instance, from costumes into different categories, and also, you know, into fulfillment, like we are now, offering out a different type of service at a different time. So it's by no means been a sort of straightforward journey, but here we are 7 years in, and we've grown to 10 million in sales, and around 50 members of staff. And our model has become more and more relevant in the marketplace. Arena, it's respected now as a good, or rather the best route to market for brands and distributors. And we have a 2-year pipeline of brands and distributors who want to onboard with us. So yeah, that's been it. And it was fantastic this year to win the Great British Entrepreneur Award for the scale up category. It was a real moment for the team where we'd all worked so hard in that period through COVID, all of the challenges that we faced, and we moved against our plans. We had to adapt. We'd had to do things outside of our comfort zone, take risks at times. And receiving that really was a moment where we could stand back and think, yeah, actually, we grew 86% in a year that everything was against us. So that was a really nice moment to us at Boulevard. And I think I'm handing over to Lois now. Is that right?
Perfect. Thank you, Dom. I read your application, and it's still amazing to hear it all back and hear the journey that you guys have been on scaling up. And we hear a lot of the same things coming through in terms of the difficulty in tapping into those networks and that kind of changing investment landscape, or just the changing business landscape in general, and how you can really react to that. And I myself am not an expert on all the legal and financial nitty-gritty, but I have a few different tips and tricks in a different way. And that's really applying for awards. So once again, I'm Lois. I'm the head of marketing for the Great British Entrepreneur Awards. And we really partner with companies like BDB Pitmans to empower our community by providing that expert advice. But what I do know is that the biggest entrepreneur success stories, they often come with that same thread of needing to get your business out there in whatever way you can. And one of the most effective ways of doing that is actually to apply for awards. Some of our recent data has actually shown that award-winning businesses saw around 63% increase in income and 39% increase in sales when compared to non-award winners, which definitely indicates that that recognition that just comes from the award alone can help you on that scaling journey. So the Great British Entrepreneur Awards, just for a little bit of context, we were established to recognise the drive and innovation of British entrepreneurs and their businesses. With over 5,000 annual applications and 12 years now of legacy behind us, we've attracted some amazing British businesses. I mean, Boulevard for one, but we also have the likes of Grenade, My Energy, Lad Bible, Dr. Pawpaw, Opoly, and that's just to name a few. This year alone, we've had a few other amazing winners come through. Of course, Boulevard and Trip Drinks is another great one that won our Scale Up and Equity category as well. So we do see some amazing businesses fly through, but also we get quite a few smaller startups that come through thinking that maybe it isn't the right one for them, but actually we see that incredible drive and innovation in their entrepreneurial story, and they still end up taking home awards. So one of the biggest things we say in terms of scaling up is that awards can be great, but there are so many out there to choose from. And the best awards that we can find out there on the market are the ones that have that incredible community behind them. They're not pay to play, so you don't need to pay anything to win. And they give your business more value than just handing you that award and sending you on your way. You really want to be applying for those awards that will work with you to advance your business development. So that's something we pride ourselves a lot at GBA. At our core of the awards program is that we want to add value by creating and connecting this UK-wide community of entrepreneurs. And one of the handiest ways that we do that is through the data that we get from applications. So we ask a lot of application questions, and all of that data is used and given back really in value. So we give our community the resources, events, and introductions that they're really looking for. based on the questions that they've answered in that application. So this could be anything from asking whether businesses are looking to scale up, and we put on webinars such as this one, or whether they'd like introductions to investors or access to recruitment services or talent pools. Really, the list just goes on and on and on. And we use that data to tailor every resource we give you, and making sure that right information goes to the right entrepreneurs and it doesn't just flood your inbox with irrelevant info. And one of the best ways that helps you to scale up is that a lot of that information that we use is used to facilitate introductions for those suitable candidates to our network of investors or organizations that are keen on investing. Well, unfortunately, I'm not allowed to name names. We actually do have we've had the opportunity to help numerous entrepreneurs connect with investors or secure substantial funding through grants and tax credits, which directly contribute to their business growth. Even the events that we put on with our partners are geared towards that value concept. One of our most impressive ones to date really was the reception that we put on with our Great British Entrepreneurs at number 10 Downing Street. So that happened around March time this year, and we got to really put loads of incredible British entrepreneurs that have come through our ranks in number 10 Downing Street with the Prime Minister, with investors, venture capitalists. And it really cultured that environment of collaboration and facilitated a lot of conversation on business growth, which is really our overall aim. We aren't really in it to give that award and send you on your way. We want to see you guys thrive from day dot all the way up to being an incredible scaled up business. And all of that access comes off of the back of a free application that actually takes less than 30 minutes to complete. So there are a lot of opportunities like this out there to give you prestige and support and assistance in a really isolating, it's a really challenging and isolating area, really, as a business leader or even a business person in the UK. It can feel sometimes that you're out there in this kind of sea of confusion and problems, really. And the biggest way that we are aiming to help is just to connect people together, really. It's forming that collaboration, that innovation, and the drive to, if we give that kind of access and resources to one entrepreneur, they will put that back through our alumni schemes and help scale up businesses coming back through the ranks again. And we see that with people like Dominic from Boulevard, who has come up from the ranks himself and is now talking with us and trying to help other businesses scale up. So really, my advice to those businesses that are looking to scale through awards processes like this is you have to do your research. There are a lot out there, and a lot of them are, I wouldn't say insidious, but they have that kind of aspect that is really, they are trying to get that money from you in the prestige of having that business name attached to their awards. You need to find the ones that are going to give you that value back, and the ones that are going to work with you to scale up rather than sending you on your way. And I realized that I've absolutely flown through mine, and I am going to hand it over now to Nick.
Cheers, Lois. Hi, everybody. So I think the main event obviously is Dominic, and we're going to get back to asking him some questions and his story and advice. But I think our job as advisors on this call is just to give you some kind of tips from the front line, I guess. So just for a bit of context and why I might be able to add a little bit of value today, I'm the head of the entrepreneurs group at a company called Evelyn Partners. And Evelyn Partners exists to serve two types of client, basically, both in the fast growth space. So one is a company. So a company that really is, post angel, post VC money, going up to being a unicorn or a decacorn, is going to need lots of tax and financial advice along the way. And, there are very common tripwires and things that can happen as you scale. And one of our jobs is to look after all of the tax and accountancy for businesses of that type. So that's kind of one of our audiences. And then the other of our audience and client base is effectively shareholders and people that are expecting to or have already made money from growing a business. So they might be early employees, they might be founders, they might be investors. But all of those groups of people tend to need some advice around tax structuring, what to do with proceeds after they've sold, excuse me, and everything around sort of, the finances about becoming, I guess, wealthy after a liquidity event. Serving those two audiences is what we do all day, every day. It's a unique proposition in that you won't find an accountancy firm that can also talk to you about your investment portfolio. You won't find an investment manager that can talk to you about your tax. So it's a really good mix for people that are growing businesses because they frankly don't particularly want to speak to two separate houses and they want the advice all joined up. So we're doing this stuff every day. Most of our clients will grow and exit once, some of the crazy ones twice, and the truly bananas ones more than that. So we are seeing these types of scaling journeys every day. We're not brave enough to do it ourselves, but we can hopefully help the people that are. So the types of advice that we give people is varied. It varies on stage, sector, type of business, ambitions, history, all of that good stuff. So would be really keen to talk to any of you about your individual circumstances. But I just wanted to pull out a few things that we see really commonly that might be things to avoid or opportunities to grasp. So I'm going to give a couple, the very high level, a couple on the corporate side and a couple on the personal side. And I'm going to be quick. So if you do want any more detail on them, do give me a call afterwards. So again, just tripwires and things that are common, and they might sound quite boring, but believe me, when you're sort of faced with these things head on, they're very, very important. So I think the first I was going to say is around share schemes and incentives, and this is something that Holly can also help with. One of the things that we see people misstep on most commonly, and a really easy fix if you're doing it right, is share schemes and EMI schemes and things like that. So people often put them in cheap and cheerfully on the start of the journey, and often cost is important and things might be a bit more slapdash than they should be. It's really common that one of our first jobs when people are professionalizing their advisors is to go in and fix an EMI scheme. So I'd take some proper advice on that type of thing if I were you. It's also a reason that deals can fall over. So we've had people that deals have been pulled because shareholders are not going to be able to get the value from the ownership of the shares that they thought they were. So that's point one. The second, on the corporate side, is around data rooms and management information. So what you will find when you come to sell a business, certainly if it's a sizable transaction, is you're going to have the vendor, the buyer, crawl all over your business, and they're going to have something called a data room in place. That data room stores things like management information, key contracts, the way that you're employing your most important, remunerating your most important people in the business. They will expect all of that information to be there, and it's a headache to put it together. I think it's quite good practice. We found it quite good practice for people to get something like that in earlier rather than later, and it's just a really good thing to practice doing. The next two things are on the personal side. One is around pensions. I know super dull, and most entrepreneurs I speak to will see a pension as something that is not relevant because they're growing value in their business. Two things that people miss. One is that actually, if you're going to have a sizable liquidity event, a pension fund is completely IHT tax, inheritance tax free. So if you're going to make more money than you are likely to spend in your lifetime, getting money into a pension is a great way to pass on to the next generation. So that's point one. Point two is that a pension can have its contributions backdated. So if you come into liquidity, you can put £40,000 into a pension. I'm being a bit reductive here. However, if you have the money, which people often do post liquidity, They can look back 3 years as well to get a really big lump into that pension scheme. You can only do that if a pension already exists at the point that you make your contribution. So the practical advice there is stick a pound in a pension and it might save you hundreds of thousands of pounds in the future. And last thing I'd say, and I'm going to be very quick here, is on a deal, there are lots of opportunities that can be taken by a founder by structuring their own personal balance sheet ahead of a deal. It needs to be years before, around things like putting corporates in place or putting trusts in place when you're thinking about the next generation. Thinking about those things 2 months, 6 months ahead of a deal is too late. You should be speaking to your advisors or people like Holly or me or other entrepreneurs that you know at least a year and a half, 2 years ahead to get that type of thing in place, or at least start to think about, you know, what they might look like for you and your family. So they're my kind of quick tips. I think what I'm going to do now is pass over to Holly to give you some more tips from the legal side.
Thank you. Thanks very much, Nick. I've got a couple of questions for Dominic in a minute myself about your journey. But before that, I'll just run through a few legal points. So most businesses like Nick that we support pre-scale have usually got by with a combination of a bit of legal input and truthfully a bit of Google copying for their legal documents, which is fine. But once you do actually start to think about scaling up your business, you really need to focus on, number one, retaining your value. Number two, protecting your brand. It's really, really important. Can't overstate that. As a general rule, scaling is going to mean, as Dominic already mentioned, taking on further investment, maybe doing a fundraise, something of that nature. So it means your potential risks and your liabilities will start to increase. It's natural. Your customer contracts that you're dealing with, they're also going to become of a higher value or a higher volume. So it becomes really, really important that your legal documents start to be tailored to meet your business needs. They're not cookie cutter anymore. They need to be tailored to you and they need to be enforceable. So what documents do I think that you need? Firstly, think about a shareholders agreement. I would really recommend a shareholders agreement. This regulates regulates the relationship between shareholders and how you deal with yourselves as shareholders. You may not have one pre-scale, or you may have one, but you need to start to review it at this juncture and update it to reflect the rights within the scaling business. For example, if you're bringing in further investment to pay for your scale-up expansion, it's an ideal time to start to think about what each shareholder has. Do they have a right to vote? What's going to happen about dividends? And lock these rights in and make it really clear between the founders, the investors, because your shareholding starts to shift and move at these stages, and it's important everyone's clear so that you can avoid any future disagreement. You've got to stay focused on your business and not get embroiled in any disagreements. So can all the shareholders, for example, vote on all the decisions, or maybe just strategic matters, and let the founders get on with running the business, dealing with operational matters? Do you need to think about building in, for example, a new share class? Picking up Nick's point about incentivization and your employee team. Do you have a pool ready to go for your employees for a different class of shares that they'll be entitled to? Next, intellectual property documents. Do you own your IP in your business? Most, if not all businesses are going to have their value wrapped up in their IP rights. It's integral. But before scaling, I really recommend that businesses find out what IP they actually own. And that may seem like a really silly question. You think, oh, I own everything. But if you have at any stage had friends, you've had family, you've had maybe more common IP consultants come into your business and maybe write a bit of your website, do some of your code, pitch in on a bit of your software as you're building it, then depending on the contract you've signed with them, if there is one, for their services, they might have actually, in that contract, retained the rights to own the IP, and they might actually own the IP itself, which means your business doesn't. We see this as a recurring problem a lot with our clients that are pre-scale, post-scale. It happens at every stage, where gaps in IP ownership arise, and they will be picked up by potential investors when they carry out any form of due diligence on you, whether it's part of a fundraise, whether it's an exit. It happens all the time. So with IP in mind, I recommend to clients all the time that they get ahead of these awkward questions that will be asked of them later down the track, and they do a bit of a check on their own IP, or help get an advisor to come in and have a look at it for them to check on their IP. And if they need to, get it sorted now. So get some IP assignments where you need them and get the IP back into the business to make sure it owns such a key asset. Moving on to leaving IP aside for a moment and moving on to terms and conditions. Sound really simple, but they will need to be updated to cater for a scaling business, because a scaling business inevitably is going to have increased or higher value contracts, or as I said already, larger volumes of contracts. It just naturally increases the risk of the business as it trades at a different level. So to protect yourself, you need to think about whether your terms and conditions have, for example, a suitable cap on your liability, or perhaps does your cap on liability, can you link it to the insurance cover that you've got? The insurance policies businesses have in place will have an amount of cover. Can you link that to your terms and conditions to make sure you're not exposed to any liability shortfall? Because as you scale, as I say, the contracts become of higher value and you can find yourself caught out. Make sure you've got also in your terms and conditions clear service and goods specifications that you can realistically fulfill. It's really, really easy, and we see this with clients. They get caught up with trying to fulfill orders, satisfy clients, satisfy customers, and they can overpromise as they scale, and it's natural, but you might be called to actually deliver that order at very short notice or be in breach of your contract. So make sure it's realistic and it's tightly worded to make sure that you can fulfill that. Perhaps there's an overseas element as well. As you scale, you're maybe going into a different market, global market, and you might have to do some cross-border data transfers of information. Maybe you're setting up a subsidiary somewhere in a different jurisdiction, and you're moving data across borders. So again, your terms and conditions and other legal documents need to cater for the data protection rules and the data that you are going to be moving to make sure, again, that you're not caught out. And finally from me, again, picking up one of Nick's points, director service contracts and employment contracts. As you scale, investors will always ask businesses for these documents. I see it time and time again. They want to see the directors and the key employees in particular having really clearly defined roles, clear responsibilities, who is doing what. They want clauses in these contracts to ensure non-competes, to make sure that there's business continuity. And these are the types of documents that are going to end up in the data room Nick was describing earlier as standard. They expect them to be there from the outset to show a really good, strong corporate governance outlook from the board, so they have faith and confidence to invest. From a legal perspective, they're my top tips and hints. I was going to, just before we go on to the FAQ, I was going to just ask Dominic a couple of questions, if I may. Yeah?
Yeah. Hey, Holly.
Hello. I'm just going to ask you a couple of questions. Obviously, you've had a really successful scale, and it's been over a relatively short period. I'm just interested to know, because one of the things we chatted about earlier is how you built that infrastructure around to support that rapid growth, because that's an area we see with clients that they can often find difficult, making sure they've got the team and just the general infrastructure to support that?
Yeah, absolutely. And this is one of the most challenging parts of scaling. I think from an infrastructure perspective, the core of our model is that we build a tech platform to do a lot of the things that others can't. So that's always been, I suppose, an area of strength for us. In terms of the team, that was a real challenge. You tend to learn, I think, not just about a role and the type of technical person you need, but also the soft skills, and how do you get someone who's a personality fit for a type of role. And that's something we spent a lot of time on and ensuring we do that. And I think also it's about buy-in. It's about people believing and understanding what the business is doing, where the business is going, and bringing people in to that journey as much as possible, letting them be a part of that, and being honest with them a lot of time around what's going on in the business, the challenges, the good, the bad, and at the same time having a structure. I do like to have a structure. I think it's important that everyone understands what their responsibilities are in the business and where that stops. But creating those communication lines was important for me. And the one thing I think which helped me a lot around that was something called Mendelow's Matrix, which is a matrix around stakeholder management and communication, and sort of puts people in quadrants as to who needs to know what about certain projects. And I think when we reached 20 members of staff, and when we reached around 60, there were two kind of inflection points there where that had to change. And we had to utilize tools to manage projects to ensure that everyone got all the information they needed at the right time they needed it. So I think in knowing those things inside out has been really important for us to be able to scale.
It's that balance, isn't it, between having a plan and being really methodical about it, and yet being nimble and agile enough as a business to adapt when you need to, like COVID and everything else that's been thrown at you. And as you scale, it's just being able to find that balance as you go and relying on your team to help.
Yeah, and there's lots of voices around. There's lots of people who will have opinions from outside the business on going one route, going another route. And I think when you speak to experts, you hold their opinion very highly. But in situations where you speak to 5 experts and you get 5 different answers, it can be tough. But I think ultimately for me, it's about ensuring we have those metrics in place as KPIs to ensure we understand the business, the underlying model is going a certain way, and what influences on current performance are based on the underlying model or are based on the situation we find ourselves in and why. And drilling down into that level of detail has been another thing. Building out a management team who understand the level of detail you have to get to when you're scaling a business. It's unlike a big company, and it's unlike a very small company. It's very, very unique, I think.
Dominic, can I ask, when you did pivot, what was that like with investors and shareholders? And did you convince them? Was there pushback? How did that all work?
Yeah, I think everyone at the time appreciated that we were living in a different world than we'd seen for a long time, and as a result, our category that we sold was going to suffer. Ultimately, it was a risk, and yes, there were those who said, are you really sure you're going into things you've got no experience in dealing with? And so we had to take risks. We had to move fast, but we did have a lot of knowledge because we do the logistics for products. So a lot of the things the nuance around technicalities of products, around border control, things like that, we started to ask why are those questions asked in said countries, and where could they become a problem in other countries, and use that knowledge and that data that we've got to really extrapolate. And don't get me wrong, there are times goods will return to us at a border because they weren't a fit. Unfortunately, the data we presented wasn't the right data, and we had to make sure that when we saw something like that, it never happened again. And that was the really critical thing. But yeah, absolutely, there were a lot of voices around that time.
Thank you. I can just see we've got some questions coming in. So question, not surprising for you, Dominic. What's the best way, what do you think is the best way to gain funding in your experience?
I think the first thing is resilience and, you know, having a mindset where you understand what the metrics are with funders. Unfortunately, doesn't matter how good your business is, you will receive, you know, 1,000 no's to every one yes. That's just a fact of how it works, unless of course you're extremely lucky. So that is the first thing I would say. I think in terms of what I learned about sourcing investors is it's very different on the different type of investors you're targeting. For those initial angel investors, I think sort of who you are as a person, what your attachment to the business is, how passionate you are about it, and convincing them that you're going to stick the journey out is as important as, you know, your business plan and your market size, et cetera, et cetera. And I think as you then go through the different types of investors at different rounds, I think it changes more to how does the business look on paper slowly. I think, you know, certainly when we raised our seed round, it was still about, are you going to see this through? And VCs are quite open about that. They see that at that stage. I think as we go to Series A, Series B, it does become more about what's your corporate structure look like, you know, what's your performance, et cetera, et cetera. Not to say our performance wasn't scrutinized those levels, because it is, and you have to know your unit economics. You have to know the contributing margin of everything you do, and that it is scalable. You have to have that plan. But I think getting into those networks is critical. And for me, as I said, I didn't have any networks, so I had to get into one network, which would then spur more. And the other thing I found very helpful is pitching, and going around to pitch at events. I think I did about 30 pitches for our angel round, and probably another 20 around our seed round, going to large audiences of angels and everyone in sort of the network, and just going up there and discussing your business and taking the feedback and revising things. Revise every time you get some feedback, make a revision. It doesn't matter how small it is, just tweak something to make sure you're understanding what it is that's not clear from your presentation, and keep going. You know, as I say, ultimately it comes down to resilience, I think.
Got another question for you, Dominic. A positive and a negative linked with scaling.
I think positive.
Could go on after resilience.
You know, but for me, I think this is quite a personal question. I think everyone has their own motivations and drivers as to what they find, you know, something they're proud of. For me, it was never, you know, get an expensive car and that's a positive of scaling. For me, it's always, we have now a team here who understand an idea I had, understand why we're doing what we're doing it, and are as passionate as me about it at times, you know. And for me, that's a huge positive. We've gone through rounds of investment, and we have that network who understand what we're trying to do, why it's different, and that idea is really brought to life. I think ultimately you're not going to get that knowledge of whether or not you are a scalable business or you are a business that the model is relevant and works unless you do it. So I think, you know, I said very early on in the business, one thing I always do is make sure my actions match my ambitions. And I think that is linked very closely to that feeling. I suppose the negative side is, you know, the turbulence of it all. And it is a very, very up and down day-to-day thing, because you are going into new things, and it doesn't matter how well you plan for something, you know, ultimately you're never going to have a bulletproof plan. You're going to go in, things are going to go wrong. And having that mind frame that you're just going to, every time you get something, you're going to very quickly implement something to learn from that and do it, and then move on to the next. But, you know, living that and breathing that is not for everyone. And I think that is something people should be very honest about with themselves, whether or not they thrive on that or whether they go the other way. Because for me personally, I thrive on that. I really enjoy the fact that you get to learn something new every day. But I would say a lot of people probably would say that's a negative.
Oh, managed to mute myself. Thank you. And we've got another question for you, Lois. It says, being a small service business without a physical product, is it possible to gain funding to scale up service businesses?
100%, definitely. We have a lot of service businesses that come through our ranks and do end up with funding through introductions. I would honestly say to really any business, service or product, the best thing really is to just send out those applications and give it a go. I mean, a lot of the time in terms of our applications, they are completely free, and it's just a great way to get your foot in the door. Even if you end up not getting shortlisted or don't win in the end, you are part of that community then, and you can gain introductions to this kind of webinar and other resources and different advice. You might not come straight out with some sort of angel investor that's come through the ranks, but you're definitely going to be in a better position to network and to collaborate with other entrepreneurs and alumni, and hopefully through that gain some sort of funding or investment. Hope that's a little bit more helpful.
That's great. Thanks, Lois. Just one question for me as well is about sort of the networks that you can sort of recommend or find useful for everybody. Just picking up Dominic's point about how hard it is to start that fundraising journey when you don't know anybody at all. Where can you go and what can you do?
That is a really good question. I would say in terms of those networks, one of the easiest and quickest things you can do is with networks like LinkedIn. There are so many different kind of groups that you can join, or different kind of collaborations, or a lot of the time they put on the free events as well, and you can just search for those. And it's the same across quite a few different other social medias. And even doing a small little bit of research and joining some newsletters, that kind of thing, you're just keeping your ear to the ground on those opportunities that are out there, and taking those up is really the first hurdle to get over. And then once you've kind of met those people, I would say it's a really strange atmosphere to be in the entrepreneurial landscape, because it feels so vast when you're that one entrepreneur. But once you've got that foot through the door, you find that you're speaking to the same people a lot of the time. You've got a lot of those people that they're almost the knowledge keepers of the entrepreneurial landscape. I mean, you've got the top tier people like Stephen Bartlett that go out there and have an incredible wealth of knowledge.
Super famous.
Exactly, but they all start somewhere. I mean, Stephen Bartlett was involved in GBA actually as well. So these people, it seems like they are stratospheric levels, and they have an incredible wealth of knowledge and all of these connections. But it really does start right at the very bottom for everybody. So yeah, I would just say to utilize those networks, go out there, do that research, sign up to things, sign up to events, sign up to newsletters, and sign up for awards. I mean, the worst thing that can happen is that you don't get through and you start again next year.
As you say, Lois, it's great for profile raising, isn't it?
Definitely. Getting that brand recognition out there is probably one of the hardest things you can do, especially when the market is absolutely saturated at the moment. So a lot of the time people aren't utilizing those networks, and it is just a way for you to kind of bump the competition in such a small and easy way that people don't really talk about.
Thank you. I think we're going to end it there on that really upbeat note about what we can do. So that is all we have time for today, and thanks again everyone for joining us, and like I said, we will be circulating the Q&As that have come up at the end here, and all of our contact details. So if you have any questions, please do get in touch with any of us, and have a great rest of your day. Thank you very much.
Thanks guys.
Thank you all.
Thank you.